Good morning, everybody, and thank you for joining our webcast today with Adcore. The purpose of today's presentation is to give Bristol's audience a better understanding of the business through a presentation and then questions with management. The discussion is going to be led by CEO Omri Brill, who's also joined by Martin Vanderbem, Chief Partnership Officer. You should see the presentation in the webcast. If you would like to receive a copy of this deck and don't have one, simply email me, glenn@bristolir.com. I'll be happy to send you a copy. We're going to break for questions at the end of the formal presentation. When we do break, we encourage those questions. And as a reminder, we're only taking questions using this web portal. Remember, you could submit a question using the question text box within the portal at any time. I'll ask the questions on the air for everyone to hear, and then Omri or Martin will answer. I'm not going to reference any names, but simply read the questions asked. As we have a fairly large audience today, if I can't get to your question online in time and has not yet been addressed during the call and can be, I'll come back to you by email. I'm not going to read the forward-looking statements, but I do state that they apply, and I reference them on page 2 of this PowerPoint. With that said, thank you again for joining us. Remember, this is fairly informal, and we do encourage questions to help you better understand the business and its growth path. And now I'll turn the call over to Omri to start his part of the discussion and presentation.
Great. Thank you very much, Glenn, and welcome everyone. It's our pleasure to present the Adcore story today, and hope by the end of today's presentation, you're going to like it at least as much as we like our company. So with no further ado, let me start by sharing my presentation. Just 1 second. Okay, great. Okay, so as Glenn mentioned, we do have a forward-looking statement, so everybody can obviously read the forward-looking statement within the presentation, but in the sake of progress, we're going to skip it for now. And let's talk about Adcore. So Adcore is a leading AI-powered marketing technology company. We are listed on the Toronto Stock Exchange, proud listed on the Toronto Stock Exchange, but the company is a global company by nature or by source. Headquarters are in Tel Aviv, Israel. We have offices in Toronto, Canada, Winnipeg, Canada, offices in the States, offices in Melbourne, Australia, and 2 offices in the Greater China region, 1 in Hong Kong and 1 in Shanghai. So quite a global team. And the company is focused in marketing technology, whether it's technology and solution on top of the technology. That's basically what we do, and we do it quite successfully. The company vision is effortless marketing. In a sense, we wake up very early every day and work very hard in order to make our client life as easy as possible in online marketing. So we are strive to develop the best apps, the best tool for them in order to help them achieve more for every other advertising dollar they spend, and basically make their marketing effort effortless. Some high-level investment thesis about Adcore and why we believe it's such a great or interesting investment opportunity. So it's a fast-growing company. In the first 9 months of the year, 2023, revenue grew by almost 30% year-on-year, so it's quite an impressive top-line growth. If you're looking about midline growth, then yet again, strong numbers as well. In the first 9 months of 2023, gross margin were 41%, and compared to 43% in 2022, so still a good margin that we maintain. Profitability in the 9 months of 2023, total adjusted EBITDA was $1 million, and if you look at the core EdTech activity, the total adjusted EBITDA was $2.6 million. And last but not least, the company have its own proprietary technology, our suite of marketing apps that Martin will cover later down this presentation, but basically that's the Adcore secret sauce, and a lot of the success and the scales that we see in recent years come due to the technology that we have. If you look at the company potential market, addressable market, it's massive. Even today, 2023, we are reaching almost 1 trillion. So to be accurate, it's $900 billion. And equally important, the addressable market size for us is projected to grow by 30% by 2026. So it's going to be $1.16 trillion by 2026. So that means it's not only in massive markets of online advertising, but this market is also growing or continue to grow. Actually, this slide is one of my favorite slides because it's covered the tectonic industry changes that we see in online advertising. And if you look at the left slide, basically, we can see that this is like the percentage of the market shares that every ad network obtain. And the blue part of this graph is actually Google and Meta combined. And we can clearly see that starting 2016, 2017, Google and Meta basically are fading away, they're losing dominance, and there's more and more other channels that come into the party in a sense. So obviously new companies like TikTok, Snapchat, maybe it's Amazon advertising, maybe it's even Apple advertising, but basically a world that's been very much dominated by two massive giants like Google and Meta become much more diversified right now. On the right side, we can see the exact same story, but on geolocation. So again, the US part, or let's say market share within the online advertising pie is also reducing. And we see the rise of emerging market and other geolocations as well. And basically both of these parts telling the same story, and the story is that the market conditions are becoming much more diversified and much more complex. So if let's say 10 years ago it was pretty easy, you can open an account on Google and on a Meta and maybe target the US, now your life as online advertiser are far more difficult. And these challenges actually are good news to a company like Adcore. And we can clearly see this demonstration, let's say 2007, maybe a client can open just a Google account even, focus on the US, and still gonna have a very good coverage of the entire online advertising pie. Having said that, in 2023, it's much more complex. You need to be on multiple channels, on multiple geo locations, and basically you would ideally need a company like Adcore to sit in the middle with the right technology and basically have access to all the different ad network and basically the ability to operate and in all the different geolocations as well. And when we talk about the company, let's say marketing and sales strategy, the company have two main strategies. The first one is to spread globally. So if in 2006, the company was founded in Tel Aviv, Israel, and it took us 10 years to open the first branch outside of Israel, which was Melbourne, Australia. Fast forward, since we went public in 2019, we opened in 4 years, we opened 4 new branches. So Canada in 2019, and then Hong Kong in 2020, Shanghai, China in 2021, and 2022, we opened a US branch as well. So we can expand much more globally, and this is also giving us an edge. Again, remember the graphs that we say that the world today become much more complex, and in order to get a good coverage, you need to be everywhere. And Adcore is literally to date almost everywhere across the globe. The same concept that we want to spread geo-wise, we also want to spread in the solutions that we can provide. And we took the exact same approach, but for solutions. So if historically Adcore was very good around campaign creation and optimization, we took a decision that basically we don't want to stop there. And if you look at the media journeys that the typical client is taking, it's actually start way before the campaign creation and optimization part, but it's also end after the campaign creation and optimization. So maybe it starts with account creation, and then media research and planning, and then feed creation and optimization, obviously campaign creation, and then obviously reporting and data analysts, and then financing, budget management, and everything around it as well. And basically what Adcore decided to do is that we want to have a specific solution or a specific app around each of these, let's say, milestone with regard to the media buying journey. And this is bring us to, let's say, to the Adcore suite of technologies that we have to date, which we call the Adcore Marketing Cloud. And maybe, Martin, you want to share some insight and maybe give us a quick tour, maybe in one of two apps, so the audience will have some type of understanding about what the Adcore technology can really bring to our clients.
Absolutely. Thank you, Omri. I'm gonna share my screen so I can show some of our apps. First of all, like Omri mentioned, we built the Adcore Marketing Cloud, which is a completely SaaS solution, meaning people can log in anywhere from any device in the world to use our technologies. And we have clients that use multiple apps depending on their needs and the stage of the maturity in the digital journey. So there's many different apps, different functionalities. And for today, I'd like to showcase two of these apps. One of them is called Effortless Marketing, which we built on top of Shopify. Shopify, as you know, is a great success story from Canada, a huge number of retailers on the platform. And building a website is one thing, but it's very important that you also build a way to generate traffic. And that is where Effortless Marketing and where Adcore comes in. So we can facilitate technology to start advertising on Google, on Facebook, on Microsoft Advertising. And we do this through Effortless Marketing, which can be installed from the App Store, kind of similar as you would have on the Apple Store or the Google Play Store on your phone, where you install apps for your phone. Similarly, you can install apps for Shopify store owners. What I'm gonna do is show this video that explains in 1 minute how easy it is to connect multiple platforms to generate traffic to the e-commerce stores.
Effortless Marketing is a holistic marketing solution for store owners. From feed creation and submission to smart campaign creation and performance tracking, our app makes it easy for store owners to promote their products on Google, Facebook, and Microsoft. You can monitor from the app how much traffic and sales have been generated and adjust budgets and goals accordingly. Once you download the app, it will automatically generate a unique product feed URL. You can further customize your feed by applying filters, such as in-stock items only, additional image links, and much more. It also shows you your feed statistics, including how many stored products and feed items you have. In the Merchant tab, select the channels you wish to promote your products on, whether it be Google, Microsoft, Facebook, or all three. From the Campaign tab, you can create a Performance Max campaign. Once the campaign has been created, track its performance in the Reports tab. You can also fine-tune the daily budget and ROAS goals directly from the app. Whether you are a seasoned store owner in need of a multi-country and currency solution, or have just opened your store, Effortless Marketing is the app for you.
All right. So again, this is a great tool to automatically start advertising on Google, Facebook, and Microsoft Advertising, get the traffic in, get the revenue in for your e-commerce store, and then start building more sophistication in your campaigns. And one of the other apps that we have and is utilized by many of our agency clients and direct advertisers is called Semdoc. So Semdoc also sits within the Adcore Marketing Cloud, so a family of different apps where people can easily switch between the apps. And what Semdoc does is automatically analyzing account performance in as little as 30 seconds. And then how it does, it pulls 52 different metrics from a Google Ads account or Microsoft Advertising account, analyzes the data, benchmark to industry benchmarks, vertical insights, and then gives you a score, in this case, a 26% score. And the beauty of it is it can identify waste in an account, it can identify growth opportunities, and gives you back meaningful action items that you can leverage on to get a more profitable ad campaign. And this is a great way for us to win new businesses and also to provide value to our agencies that we work with, and they in turn use this for their client base. And it's very much around insights. And to finalize this demo, if you were to do an analysis like this, it probably takes you 4 hours to 8 hours as an individual to create insights, whereas this technology combined and powered by AI can do it in as little as 30 seconds. So that's the beauty of this technology and why our customers love it so much. There's way more apps, too many to cover today, so I'm happy to do that in a separate session. But for now, I'd like to hand it over back to Omri to talk more about the financials.
So great presentation, Martin, regarding the tech. That's always good to see. I think like the sum up doing what they're doing and just talking about it's like two different things. But let's go back to the presentation, and actually I would like to start covering the company financials. So on the right side of the right top side of the graph, you can see the yearly revenue graph, and we can see 2018 was 12 million, 2019 15 million top line, 2020 was 23. 2021 we had a big spike because of COVID related spend of almost 36. 2022 was 27. And basically, this year we already in 9 months did quite well, around 23 million already within the 9 months. And bear in mind, because of seasonality, Q4 is supposed to be the strongest quarter for us in the year. And on the left side, we can see the quarterly revenue, and we can see Q1 2023 was 6.8. Q2 was almost the same, a bit higher, and Q3 was already 8.2. And this is a typical build-up of the year. So typically the year would start slow for us in the online advertising business. Q1, Q2 is going to pick up a bit, Q3 even more because of summer-related spend, and then Q4 going to be the strongest quarter of the year. And the right bottom part of the slide, we can see the revenue mix globally, and we can see EMEA almost 48%, APAC region 32%, and the North America region represent 20% of the global revenue. This is as of Q3 2023. If you look at deeper dive into the quarterly number, then Q3 2023, top line revenue were 8.2 million in revenue. That represent 10% year-on-year growth. Remember that the entire 9 months we had almost 30% year-on-year growth. Gross profit was 3.3 million. Adjusted EBITDA was 0.2 million, and total working capital was almost the same like Q2 2023, it's 7.7 million. If you're looking at the balance sheet, Adcore maintained quite an healthy balance sheet. Total assets as of September 2023 are almost 18 million. Cash and cash equivalent are 7.6 million as of September 23, and the company is debt-free, which is obviously a good thing to have in the current inflation environment. If you look at the comp table, and we put in this table other publicly listed edtech companies, some names that you might know as Aluminum or formerly Acuity Ads, and other big names like Pubmatic and other. And basically you can clearly see that basically based on the current share price and the multiples, there is an opportunity going into the Adcore stock. This is at least what the management believe, and this is why we are buying back shares in the market as well. If you look at the cap table, so total outstanding shares are 61 million. Total float is 19 million, which represent around 31% of the shares. And like I say again, we are buying shares for cancellation for the second year in the row, because we believe that the current market cap is not a fair valuation of where the company should be. So we discussed, about the company, about the addressable market size, which for us, which is massive. We talk about some high-level investment thesis. We also discuss the technologies the company have to offer and how critical it is to everything that we've been able to achieve up until now. Martin showcase some of the apps that Adcore currently have, and basically just to sum everything that we talk about, that basically, we see tectonic changes within our market becoming much more complex, and complexity is a very good thing for a company like Adcore that sit in the middle between the advertiser and the different ad platform and the different geo market. And basically, the more complex our market going to be, there's more need for solutions like Adcore has to offer. The company is fast growing and our top line, bottom line, and middle line as well. And first 9 months of 2023, almost 30% year-on-year growth in revenue and 41% gross margin. We have proprietary technology. To date, 8 different apps within the Adcore Marketing Cloud and growing. And there's plenty of still continue to grow. The company is still relatively small if you compare it to the markets that we are addressing. I think just like a few words on the leadership team, myself is the founder CEO. I've been in the company from the day we incorporated. Together with me as the COO is in Evo. Amit Konforty is the CFO for the company. And we have a team of global leaders. Vadim Malkin is the company CTO in Winnipeg, Canada. Ronit Mol is the GM of Australia. Martin van der Bem is the company CPO, Chief Partnership Officer and GM of North America. And Alina is the GM of the Greater China region. And last but not least is Zavidan, the legal counsel of the company. IR contact, whether it's Martin, CFO, Glenn, that everybody I'm sure know over here. And if you're in Europe, we have Dr. Eva Rauter as well as an IR contact in Europe. That's it. I guess we are ready for questions right now.
Perfect. Thanks, Omri. And again, to our audience, if you have a question, please use the question and answer feature within the webinar portal to ask a question. We have a number of questions in the queue already, so I'll just get going as other questions populate. So, Omri, how do you compare to larger competitors in this space? And what are some of the reasons that a business might pick you over your competitors?
Yeah, I think these few things that make Adcore unique in this landscape, I would say just to list few of them, or the most important one. Adcore is a public traded company. There's not a lot of public traded tech companies, and Adcore is quite unique in this sense. So this gives us more credibility, better, let's say, organizational structure, and basically you can trust more company like Adcore. So this is number one. Number two, by its nature, Adcore is a very global company. We have offices in 6 different countries and cities around the world. And if somebody is looking, which is probably what the large advertisers are doing today, target international markets, then team up with a company like Adcore make a lot of sense because of our perfect global presence. And last but not least, I would say technology. The fact that we have our own proprietary technology gives us an edge on a non-technology competitors.
Okay, thank you. Next question. In which of your regions do you expect most of your growth to come from over the next couple of years? And then are you planning any further regional expansion to markets that you're not currently active in?
That's a fair question. I would say the following. We are very lucky in 2023 to see a good growth coming from all 3 regions, from the EMEA region, APAC, and North America as well. I would say that North America in particular is a focus market for us, and we see it as a more strategic market. So the fact that this market will continue to grow and grow even more, if you need to compare it to other markets, for us, it's going to be a very good signal. But again, that shouldn't come on the expense of the growth we can generate from APAC and EMEA. But I would say as a region, we believe North America is a bit more strategic for us. And what was the second part of the question? Sorry.
If you see yourself expanding into regions where you're not currently active.
Yeah, I think like our global expansion days, I wouldn't say are behind us, but I would say they are mainly behind us. If any, we might have another outpost in Europe, but I think like for now, we are pretty happy with the current global presence that we have.
Okay, thank you. Next question is, you currently have a share buyback program. Can you comment on what your strategy is around the number of shares you're planning on buying back and what kind of time frame you're thinking about?
Yeah, so the current plan, correct me if I'm wrong, Martin, is good until May 2024. And basically, we have some limitation by the TSX on how many shares we can buy every day, but the strategy is very simple for us. We buy as many as we can.
Okay, thank you. Next question. There are concerns of your business operating in a very crowded space with many competitors. Do you see this as a positive, in a positive way in terms of winning contracts or in a highly fragmented market? And maybe some comments on that topic.
Yeah, like I would love to see an industry that is not, it's not crowded and there's not a lot of competitors. So I think like EdTech is not competitors more than, I don't know, oil industry or any other industry to this regards. There's competition everywhere. But if you're good, if you've been around, if you know what you're doing, and if you can give good value and good customer support, and I think people will stick with you and would like to join you. And this is exactly what Adcore been doing successfully over the years.
Okay, thank you. You have a subsidiary or division called Amphy. Can you give the audience a little bit better understanding of what that is and talk about what your plan is for that business?
Yeah, so with Amphy, it's I would say an education tech website that we started, mainly for live education, but not only live. We invested a lot in Amphy in the last, I would say, 2 years. What we are planning now is obviously we would like to reduce the invest, to basically reduce the current burn rate to the bare minimum and start to see some income coming from it. So as long as we can keep it under control, see almost zero burn rate and start to see some revenue coming from Amphy, we're going to be happy with the current result.
Okay, thank you. Can you elaborate on the recent partnership that you announced a few months back and the impact that $10 million contract will have on your business?
Yeah, I don't think it's a partnership. It's a new client acquisition deal, right?
I'm assuming that's what the reference is, yes.
Yeah. Okay, so I would say, and this type of client acquisition, you know, not to go into too much of a detail specific, but I would say on average, a solution like this is like a type of clients that we give solution on top of technology, and an average take from this type of clients are around 10%. So you can do the math how much a deal like that can theoretically be worth to the company. But again, this is just like high level and not specific to this specific deal.
Okay, thank you. You've had several press releases this year announcing that you're managing ad spend for different customers. Can you walk through how this managed ad spend translates into recognized revenue and gross margin? For example, does 10 million in managed ad spend translate into 10 million in recognized revenues?
No, that's like if Adcore act as an agent, that means we are not principal, so we don't take credit risk ourselves. We don't, you know, like basically we manage the media for the client using them, then the client pay for the media. So the ad spend don't reflect in the company books, only the fee. And like I said, for this type of client, the average fee is around 10%. So a $10 million ad spend yearly contract will be around $1 million in the book. And the gross margin over there going to be pretty good. So I would say maybe 90% gross margin from this book, 85% maybe.
Okay, thank you. I have a few questions on this topic, so I'll consolidate it all into one. Your margins and fundamentals are improving on a quarter-to-quarter basis. When do you anticipate break even or positive income for the company? Not sure. I don't believe you give guidance, but I'll let you answer that. And then the last quarter was very close to break even. Do you see 2024 as a potentially positive net income year?
It's a good question. I would split my answer into two. Like for us, seasonality is critical in online advertising, so we can theoretically and in fact lose money in the first 2 quarters of the year, but still win it everything back plus some in the second part of the year, especially in the fourth quarter. So if Q3 was almost break even, that means on paper Q4 can be profitable for us, and that can change the entire year as well. So ideally, in a good year, we will see, let's say, break even, maybe a small loss in the first 2 quarters, and then like a big win in the second 2 quarters of like Q3 and Q4. And with regard to 2024, we're still bullish regarding what we can achieve in 2024 and in 2024, sorry. And we believe the same trends that we showed in 2023 can carry well into 2024 as well. And again, the company is trying to focus on operational efficiency. So that means that if we're going to do more revenue and maintain operational efficiency, 2024 should be profitable for us.
Okay, thank you. Question around M&A, both as potentially being acquired or an acquirer. Can you just talk about, I guess, the M&A opportunity that you see in the marketplace for your business? And I guess, what value do you place on your competitors in building through acquisition?
Okay, fair question. I would say, on theory, obviously there's a lot of M&A opportunities in the market like we operate in, especially in times like that. But in fact, I would say 2 things. Adcore won't consider itself to be a target to be acquired simply because numbers are not right now. The company evaluation is far too low, and that's not something that will be even relevant for us to start discussing right now. So we don't consider ourselves at the current market cap as a target. And if somebody going to approach, we're simply going to say thank you, but no thank you. And with regard to acquire other businesses, and that's definitely for us for the long run a strategy we would like to take. For now, we try to be a bit more conservative, preserve the cash positions that we have, and focus on the business efficiency. If you see, for example, that the market conditions are becoming better, we can go to the market and raise more money and do some interesting M&As, then that's definitely can be interesting for us 2024 and moving forward as well.
Okay, thank you. Can you discuss the company's geographical strategy? And I know I asked a similar question earlier, but I think this is a good follow-up. So discuss the company's geographical strategy and how the team has looked to recently expand your footprint in North America.
Yeah, so we all the time like when we say it, we mean it and we do it. So if we say that North America is a strategic market for us, and obviously we are try to grow the team over there. Focus when we grow the team, and the first people that we would like to bring on board are more sales type of employees, you know, because we need to acquire the best way to grow the book over there is to acquire new clients. So we are growing the sales force in North America, and it's something we already did in 2023 and looking to continue to do in 2024. And basically put more and more resources. Basically, the other resources is more, let's say, delivery type of teams as well. But we start with acquisition and then delivery. We have a lot of tech in North America as well, R&D that we do in North America. So it's definitely an important market for us.
Okay. What percentage of your current revenue is generated from principal transactions?
Yeah, I don't want to be like I would need to ask the CFO for the exact number, but I would say for sure more than 50% of principal transaction, let's say in top line. If you look in the middle lines, then basically maybe it's 50-50 split.
Okay, thank you. Here's a good question. Can you put a number or a percentage on a range of cost savings for a business using Adcore suite to collaborate all into one platform to manage digital advertising? What could this be for your ideal size customer?
It's an interesting question. I don't think I have like a number to give you. Having said that, I can give you the following, and I can give you the concept behind the Adcore Marketing Cloud suite. So if you think about Adobe, a very successful software company for sure that everybody know, that basically Adobe a few years ago come up with Adobe Creative Cloud that took a lot of very successful yet independent apps that the developer acquired over the years and put all of them under one roof, which they call the Adobe Creative Cloud. And the idea over there that if I'm a designer and I would like to use one of the apps, then I can get access to the entire cloud and basically start using all the apps. So a specific designer usually not going to use the 19 apps that are available on this cloud, but maybe you're going to use 3 apps, 5 apps. But it's very easy once you have an access to this cloud you don't need to start shop around and looking for other solutions as well. And the same concepts exactly Adcore like to do for online marketing. So whether if you need a fit solution tool and you started to work with only one app that Adcore built, which is Feeditor, for example, yet once you have an access to the Adcore Marketing Cloud, you can start look for additional solution, additional apps, and basically find everything under one roof. So the concept is basically more the ease of doing everything, doing business in one place and not need to go now to showbiz different store with different vendors and different software suppliers.
Okay, thank you. Can you comment on your current spending on R&D? How much investment are you, I guess, putting into new technology? Are there new applications that you're thinking of developing to add to your current suite?
Yeah, and the short answer is a lot. We're putting a lot of emphasis on technology, and especially now with AI, we have like it's technology on steroids, right? There's much more we can do and much more interesting stuff as well. And I think like technology for us is critical, and a lot of the technologies we are developing, it's for, I would say, some of it at least start for internal use, stuff that we are already doing and we know we're going to have demand that we are or are in demand, and basically this is why we build the apps, and then we add it to the cloud and make it available for everyone. But I think like for us, technology is critical, and if I need now to decide, you know, whether I put more R&D resources or put more effort into develop a technology solution or do a human-based solution, then obviously I would vote for technology in every given day because it will allow me to scale, and for the longer run, it's going to be far better and more effective. And that's the way the company being operate. This is already proven, you know, like a lot of the great results that we see, for example, in 2023 are due to a shift in this decision to put more and more effort into technology.
Okay, thank you. And I guess as a follow-up to this point, can you talk or would you have visibility into how many more apps you could see being introduced next year and beyond?
Yeah, it's a fair question. I would say the following. If you look at, let's say, 2023, we estimate to finish 2023 with a record number of 3 to 4 new apps, which is a lot, you know, if you need to compare it to previous years. So that's mean, again, that's emphasize how much more effort we put into technology, how better the team has become and what we can achieve. Having said that, it's not just a number game. It's not just like adding more apps. It's also the quality of the existing app and the quality of features within the app. So there's no plug numbers of the amount of apps that we would like to add, as long as we think they are in demand and they're going to bring value to our customers. But I would say if you look at 2023, then the right number is 3 to 4 apps in 1 year.
Okay, thank you. Again, ladies and gentlemen, if you have a question, please use the Q&A feature to ask that question. We have a couple more questions in the queue here, and then look for additional questions before we end the call. So I guess next question for you, Omri, is can you talk about revenue concentration by clients? A few people asked this. Is there any one customer that accounts for more than 10% of total revenue?
Yeah, if you look at the company financials, we do have clients that count for more than 10% of the revenue. I think the total concentration of clients that have more than 10% is around 50% of the total revenue.
Okay, thank you. And I believe you touched on this during your formal remarks, but I guess we've got some follow-up questions, so maybe just go over it again. Talk about the current insider ownership, the ownership by founders, and then maybe break down on the float between institutional shareholders and individual shareholders, and how you sort of think about your current public float.
Okay, so we look at the public float. We estimate the public float to be around 31%, which is 19 million shares. We don't have an up-to-date breakdown between institutional holding and let's say retail holding. So it can be anywhere within this range, but still it's pretty tight, you know, like a float, and we keep it even more and more tighter because we are continuing buying shares for cancellations.
Okay, thank you. I guess without any additional questions, one more question I'll ask you, and then we'll end the presentation. Who do you think would be the best peer comparable known company that I guess our audience could refer to as they think about you and reviewing you?
Okay, that's actually a very good question, but the answer is not as straightforward as you might guess, because Adcore have many different solutions, and basically for every solution that we have, let's say, a different set of competitors in a sense, right? So if, for example, we take our feed editing and optimization app, which is named Feeditor, then basically you can think about company like Channel or Feed Advisor or other companies that have similar maybe tools for feed editing. But these are specific companies that have specific solution for one thing that Adcore is doing. But I would say, in general, I can't think on a specific public company that is a good competitor to everything that Adcore is doing, because Adcore have many different things that we are doing, and we have many different solutions. Again, for each solution, we have a specific set of competitors. Martin, is any company that came to your mind?
No, I totally agree. It's very fragmented. One thing I want to add is also that per region can differ a lot as well, and also the needs per region are different. So in Greater China region, we have different needs, different clients that use different of our tools than in North America versus EMEA. So there's no one answer, unfortunately, but it is a good question, and we continue to try to give more clarity on app level, and like Omri mentioned, for feed management, there is a couple of competitors out there. But different for every app, and that makes us in a unique spot, we feel, especially as a public company. There's not many companies like us out there.
Okay, thank you. We do have a couple more questions that came in, so I think there's some good ones, so we'll ask them. Maybe for the benefit of our audience, if you could sort of create a case study or talk about a case study of how you go to sell to a new client, how they choose you, or what their process is for choosing you over a competitor, and typically what goes into their decisions.
Yeah, it's a good question. I would split my answer into two. If we're talking about pure technologies and the process is seamless or effortless, basically I would say a typical client would go online, look for a solution, let's say again, feed management tool solution. Maybe you would read in a blog article in the Adcore blog about it, and then you would go to one of the product pages, let's say the Feeditor page. And then what you can do from this page is just to open a trial account and start using Feeditor to test it. And then you're going to have a 21 days free trial to test it. And then if you're happy, you can choose which plan is suitable to his need. You know, it depends on the size of the feeds that he have, how many updates he would need to do, how many users he would need access to, and basically put his credit card details online and start paying for the tool. As simple as that. He can go with a monthly subscription or a yearly subscription. It's up to him to decide. So it can be very easy and straightforward. maybe he didn't speak with anyone from our team. He can do it everything by himself. Maybe he can approach the same team and ask some questions and get some guidance as well. But I would say more or less it's a very easy and straightforward process. Obviously, if we're talking about a bit more complex client with required also solutions on top of the technology, then the process is a bit more lengthy and it's a bit more people attached to it. So a typical client will approach us, maybe he was referred to us, a lot of clients refer to us by partners or other clients as well. And then usually, Martin, maybe you would like to discuss the process, but we would do like an audit and then basically like audit whatever he's doing now. We'll showcase him where we can contribute value. And then if you like what we have to offer him, then basically he will sign a contract. Usually it's going to be an yearly contract and he's going to start working with us. So I think like it's, again, I would say in this type of process, I would say it's anywhere between few weeks, I guess, to 1 or 2 months before we can win him as a client. Martin, anything you would like to add on the process?
Yeah, no, I totally agree. That is a fair representation of the process. And what people really like is when we do this audit, is we give meaningful insights on what we think we can improve, and we make it very concrete. Like in the next 3 months, you can expect this growth in revenues or improvement in profitability of the ad campaigns. And that's what our customers like, and that's not every agency is comfortable doing, or marketing solution provider is comfortable doing. And next to that, our pilot period also gives them the opportunity to really test it out, get comfortable with our tools, with our team, get to know each other. And it's a perfect way for us to lock in a long-term deal. And at the end of the day, also what Omri mentioned, it's all results that count, and having the great relationship, and that's how we are able to maintain long-term relationships with our clients.
Okay, thank you. A couple more questions here. I guess clearly Israel is in the middle of a very difficult war, and a couple of people would like to find out, what impact has that had on both the business, your employees, and your day-to-day operations?
Yeah, again, a fair question. I would say in the beginning, like everybody were a bit in a state of shock over here, but obviously that's not the case anymore. I would say in the beginning, people switched to work remotely, but the work didn't really stop. We have retail clients that continue to run the business. We have some, let's say locally in Israel, some travel-related clients that maybe stop activity, but then we got other budget as well that are basically from a government-related budget that we won, because we won a very big government tender 5 years ago. So I think all in all, actually in terms of online budget managed from Israel, it didn't go down, it go up during the war. And again, Israel is just a small portion of what the company is doing, because we are now a global company. So I say Israel is a small portion, but this portion actually grew up. And I think people's spirit, with everything that's going on, is still strong. We resumed to work from the office in Tel Aviv, and everybody trying to do our best, obviously to support our people, but also to make sure the businesses continue to run as usual. And we're going to have a successful Q4, and obviously starting the preparation for 2024 as well.
Okay, thank you. And last question for you gentlemen. I guess a great place to end the call is maybe get your views on both the ad market and how you think you fit into it in 2024. And then as you think about your business, what excites you the most going forward?
Yeah, it's two different questions in a sense, but I can see the relation between them. So I would say, if you're looking at the ad market, one of the things that I love the most about the ad market is it's always changing. It's never stays still. And the ad market in 2023 or the 2024 going to be different to what it used to be in 2023. And I will guess, but I'm not going to be mistaken, that the same story going to repeat in 2025. So companies that understand that, not to prepare, not to adapt themselves, not to come up with new solution to the change market, actually going to have an edge and going to end up as winners in this market. And I think Adcore proved time and again that basically we know how to do it. We know how to adapt. We know how to come up with new solutions that are more relevant and do everything that we need in order, to be there for our client when the market is changing. So this is one thing. And I think with regards to the company, what makes me exciting about the company is that I think like we are already 4 years plus as a publicly listed company. I think we grew a lot and we understand a lot what's need to be done. The company have much more, I would say, good understanding what should be the company value proposition for the market, a much more solid strategy moving forward. And I think like just like being able to focus on it and execute on the strategy, I think it's bringing results. And every time that you have strategy, you focus on it, and you can bring results, that's exciting, right? Because it's give you more energy and more push in order to continue execute on your strategy. And I think that's what the company is doing 2023, and I would say double down on it in 2024 and hopefully double up the result as well.
Super. Thank you very much, Omri. Thank you very much, Martin. And thank you to our audience. This concludes the presentation. And if you do want to receive a replay of this, we will have a replay available at some point starting hopefully tomorrow. Thanks again, and everybody have a good day.
Great. Thanks, everyone.
Thanks, everyone.